Global stocks are down this morning after weak US manufacturing data raises fears about a deeper slowdown. The Australian dollar is down over 1%. And Australian GDP growth figures today should show a teeny bit of growth, and South Korean inflation hits the central bank's target. That's coming up in our 5 Things in 5 minutes. And then in our bonus deep dive interview, ANZ Group Chief Economist Richard Yetzinger reviews Australia's trade relationship with ASEAN from the ANZ-sponsored AFR Asia Summit in Melbourne.
Focusing specifically on the ASEAN economies, Australia does seem to have lagged a bit in that space, and so the government's Asia strategy focus on that region I think makes a lot of sense.
But first, in 5 and 5 with ANZ. Weak manufacturing data in the United States caused stocks to fall, with the S&P 500 down 1.7% at 4 a.m. Sydney-Melbourne time. While the ISM manufacturing index rose, it remained in contractionary territory, with new orders the lowest since May 2023. Oil was down around 5%, while yields on US Treasuries fell 4 to 6 basis points. The market is pricing in a near 30% chance the Fed could cut rates by 50 basis points in September, although a 25-point cut is seen, though, as most likely for now. Today in Australia, ANZ senior economist Catherine Birch is forecasting economic growth in the June quarter of just 0.1%. That's actually slightly below the market consensus, and that would create annual growth of 0.8%. That's a touch weaker than what the RBA has forecast.
A slightly weaker than forecast GDP result is unlikely to shift the RBA's thinking. We'll probably see some pretty weak household spending data in the national accounts data today, and it will be a good gauge of how weak the household sector actually is. Our forecast is that household consumption will grow just 0.2% for the quarter. But this will need to be considered in the broader context where we have the stage 3 tax cuts as well as cost of living relief measures that began in July.
That weak US data triggered a risk-off view for currencies. The US dollar index was up 0.2% at 4 a.m. Sydney-Melbourne time. The Australian dollar down 1.2% at 67.10 US cents, while the Kiwi fell 0.8% to 61.80 US cents. Number 2, the 2 final pieces of Australia's GDP puzzle came out yesterday. Catherine says net exports were weaker than expected.
Balance of payments data showed Australia's current account balance declined by $4.4 billion to a deficit of $10.7 billion. Now, this is the largest deficit in 6 years and reflects falls in commodity prices, particularly for iron ore and coal, as well as higher income paid to non-residents. The fall in commodity prices also drove a 3% drop in Australia's terms of trade in the quarter.
Number 3, the other partial GDP indicator was government finance.
Government spending and investment in Q2 was stronger than expected, with consumption up 1.4% over the quarter and investment up 1.5% over the quarter. Public demand is expected to add a solid 0.4 percentage points to Q2 GDP growth.
Number 4, South Korea's annual inflation dropped more than expected to 2% in the year to August from 2.6% in July, and it hit the Bank of Korea's target. Here's ANZ Chief Economist for Southeast Asia and India, Sanjay Mathur, on what that means for interest rates.
We had been progressing towards it since April, but exactly when we were going to hit it was uncertain. Now, the data is quite encouraging, and it allows the BOK to move potentially in October in terms of its first rate cut.
Number 5. Here at 5 and 5 with ANZ, we were at the ANZ-sponsored AFR Asia Summit in Melbourne yesterday, and we'll provide coverage over the next few days. First up, Australia's Foreign Minister, Penny Wong, spoke about a growing pipeline of projects being developed in Southeast Asia through Export Finance Australia, particularly in energy transition and infrastructure.
We've established new dual team hubs in Jakarta, Singapore, Ho Chi Minh City, offices in Hanoi, Bangkok, Kuala Lumpur, Manila, Phnom Penh, Bandar Seri Begawan to connect Australian investors with opportunities in the region. In the June quarter, our deal teams engaged 157 companies and institutions to discuss plans for the region and investment opportunities and facilitated the largest ever Australia investor delegation by value to Singapore and Vietnam. Austrade have had their best ever client result in Southeast Asia with over $1 billion in commercial outcomes since the beginning of 2024. We've opened new landing pads in Jakarta and Ho Chi Minh City to help more Australian startups engage and enter new markets in the region, building on the success of the landing pad in Singapore. And our Southeast Asian business champions, including Shamara Wickramanaya, Jennifer Westacott, Tony Lombardo, Shane Elliott and Peter Fox, are actively working with Australian businesses on the opportunities and leading high business level delegations to the region, and I thank them for their work and for their leadership.
Australia's Foreign Minister Penny Wong there. And now for our bonus deep dive interview, I spoke to ANZ Group Chief Economist Richard Yetzinger about the minister's focus on ASEAN at that AFR Asia conference.
The Minister spoke a lot about what the data's been telling us. The numbers are the numbers. Australia does look to have underperformed in Southeast Asia particularly. Asia as a whole, more than 80% of Australia's merchandise exports go to Asia and about half of Australia's service exports go to Asia. On those numbers, it's hard to argue Australia is underweight the region, but focusing specifically on the ASEAN economies, Australia does seem to have lagged a bit in that space, and so the government's Asia strategy focus on that region I think makes a lot of sense with a very forward-looking lens. The demographic impulse in Asia, if you like, has clearly shifted away from North Asia towards ASEAN and Southeast Asia, and of course India. One of the complications for Australia is the big end of town of corporate Australia is dominated by the resource sector and the financial services sector, with a couple of tech companies thrown in. They're companies often that tend to have transactional relationships with their customers rather than deep and binding relationships necessarily, because certainly the resource companies obviously specialise in products which are, pretty homogenous and bulk. So looking for kind of on-the-ground business-to-customer presence, customer relationships in Southeast Asia, it's really a mid-size company strategy. That's the part of the business sector which operates the sort of businesses which are likely to be required to develop that.
Do you see the potential for the mix of Australian exports to shift from North Asia down through Southeast Asia and into India?
I would hope there's a shift. Certainly that's where the kind of economic pulse is shifting. And let's not forget, China's had 3 decades of quite difficult economics and yet is still a major business customer and a major economic partner for Australia. So China, Korea, other economies are growing more slowly as their demographics move on and their debt levels become a little bit more binding in terms of what generating the sort of growth they can. Doesn't take away from the fact they're likely to remain really important customers. At the margin, though, it's hard to disagree with the idea Southeast Asia and India is going to be where it's at.
So there'd be supply chains and sales forces and all those things when you're dealing with these nations, particularly with services.
I think there's a bit of a proclivity to think that way. The reality is what Australia trades is largely resources on the export side or services, tourism or education. In large part, that's what makes up the Australian trade offering. And hopefully, certainly on the mining side, on the resource side, the mix of that changes over time to become more environmentally friendly, to become more tapped into the climate transition, to focus a bit more on critical minerals and rare earths, but it would take a wholesale restructure of the Australian economy to change away from those, if you like, fundamental truisms about what Australia's export basket looks like.
So the conference was opened with a quote from Paul Keating, who said in the early 90s that Australia needed to reorient itself to its own region. Has that happened in the way that he might have expected?
It's interesting. It's a question that keeps coming up, Bernard. I don't know, obviously, what the former Prime Minister had in mind. I do know that Gough Whitlam, the Australian Prime Minister in the 1970s, spoke about Australia's economic future lying in ASEAN. In the late 1980s, when I was at university, there was a government report on the Northeast Asian ascendancy. The next decade, there was another report. And then more recently, this government has issued a report which has focused back on ASEAN. Sometimes I think these reports come across as Australia trying a bit hard to be part of the region, and there's probably part of that. But I think if more than 80% of Australia's merchandise trade goes to Asia, it's hard for Australia to argue it's missed out on something particularly. And even half of services, it's hard to argue Australia's missed out on something particularly in the region. Reframing engagement with the region as the region changes makes absolute sense. So maybe we need to ask ourselves why those reframings come across as looking kind of to make up lost ground. It's not obvious to me we've lost much ground at all.
Richard Yetzinger there. Over 300 business leaders attended the summit yesterday, and we'll have more interviews in the coming days on 5 and 5. I'm Bernard Hickey in Melbourne. That was 5 and 5 with ANZ for Wednesday, September the 4th. Catch you tomorrow with a full review of how well the Australian economy is tracking. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.